It's Matt Simpson from Forex.com, and today I want to talk about the importance of 100 and the US dollar and how it has stolen the safe haven crown from the Japanese yen. But to begin that story, we need to look at oil prices, which are on an absolute surge. Now, I've had to really zoom out here onto the weekly chart to show how far oil prices have rallied. And this weekly candle was 35%. Most of it was on Friday, which is the most volatile week we've seen since 2022. But it's near levels of volatility we've not seen since oil prices rebounded from zero. Today, we see that oil prices actually rose 20% in the first few minutes of the weekly open, and they've traded as high as 30% today as well. Now, they've pulled back. Volatility is indeed cutting both ways. And the obvious backstory here is what's going on in the Middle East, escalation of war, and the higher and longer oil prices remain elevated, the more chance there is of a global recession. So whilst the initial reaction might be high oil prices are inflationary, that might require interest rate hikes, the reality is that the global economy can't really handle high oil prices for too long, especially when it's this quick. Unfortunately, central banks can't really impact oil supply, but war can. So the longer this stays higher, the more trouble there is for markets ahead. And I think the US dollar will continue to maintain that crown. But if we do get a de-escalation in war, we could see a quick reversal in many of these moves we've seen this past week. So starting on the US dollar futures market, 100 is clearly a very important level for traders. It didn't quite reach there last week, and it seems hesitant to test it today. So traders are clearly watching this level, and that's a pivotal level, not just the dollar index, but of course, euro, dollar, yen, Aussie, etc. But if we look at this left chart, this is showing how traders are positioned against the US dollar across all currency markets in total. And it actually reached the most bearish level in 5 years 2 weeks ago, which hinted a sentiment extreme. And since then, traders have actually reduced about 9.7 billion worth of dollar shorts. And the dollar is, of course, rising with the reduction of that short exposure, which is what we're seeing here. That's quite the opposite to what we're seeing on the Japanese yen, which is usually the safe haven, but not at the moment. So on the left-hand side, we've got large speculative positioning for the Japanese yen futures market. They flipped to net short exposure last week despite the risk-off sentiment around the Middle East. That's not what you'd usually expect in times of turmoil, but traders have effectively given up on any meaningful hike from the Bank of Japan, and they are favouring the US dollar over the Japanese yen for safe haven flows around the Middle East. On the right-hand side, we've got asset managers, and they reduced their net long exposure to just 17,900 contracts, which is actually the lowest in 13 months. Clearly, that is trending lower, so it just seems a matter of time before they also flip to net short exposure. Again, it's not really screaming a buy signal for the yen at the moment. And that takes me to the dollar-yen chart. Weekly on the left shows what this nice strong rally is trying to move higher today. Why? Because traders are favouring the dollar over the Japanese yen. Thing to keep in mind though, if the dollar index remains below 100, then chances are dollar yen will probably struggle to break above 160, which is a level it just can't seem to hold above or reach in recent times. As for the euro, of course, if the dollar index remains below 100, then we might find that the euro should actually remain supported. Again, it's really down to what happens in the Middle East. Does it get worse? Euro is probably going to go lower. Does it get better? It will probably remain supported. I think for me, a key line in the sand is 114 on euro dollar. I think at the moment already, what we're seeing today is markets reacting to weekend headlines, and already that downside volatility is receding ahead of the European Open. Hopefully I'm correct in that and things don't get worse, but at the moment it looks to me like there's going to be some dip buys. That said, there's not really a major call here for a meaningful bounce. What I'm really saying is that bears probably want to tread with some caution. And the Aussie dollar has just snapped a 6-week winning streak. It's had this wonderful strong rally since that last April low. It does seem like it probably is in need of a correction, and it seems to have begun last week with this bearish engulfing week. That said, you've got a hawkish RBA at the moment. Data coming in from Australia does seem supportive of a hike in the next few months, not necessarily March. And the market did hold above 2024 high last week, and you've got the 69 cents level as well. So look at the price action on the daily chart. It's quite scrappy. It's not my favorite one, but what I can say at the moment is that rising oil prices aren't risk off or risk on for the Aussie. It does seem to want to hold above 69. So unless we say significant change in underlying conditions, I suspect dip buyers will be coming in for any moves to these lows or towards 69 cents. And on these sorts of conditions, at the same time, I'm not really looking for a breakout either. You're literally looking at the range, looking at lows and highs respectively. Now, as for economic data this week, we do have a decent lineup, but it's kind of irrelevant. And it's a real shame because we have US CPI and US PCE inflation. They don't usually land on the same week, but we've seen them land on the same week because of the government shutdown, backfilling the data, etc. But looking at last month's inflation data is kind of irrelevant when you've got oil prices going up 20-30% a day. That is the biggest story here, and that's what's going to dictate sentiment. The inflation data will be a nice story to know, but all central bankers will be keeping a close eye on based on what's happening with oil prices. Anyway, if that's useful, wish you best of luck with your trading.